All right, good morning, everybody. I was like, oh God, I forgot to start the tickets. I know how you guys get. You're like, where are my pip chips? I didn't get it. Hold on one sec. Let me make sure that's good. Let me click this. It's funny, I've been like sitting here for like 15 minutes. I'm like, all right, ready to start. And then literally 5 seconds before I'm like, oh God, I forgot something. It happens every time. Every time. All right, there we go. All right, that's good. All right, so for those of you that were on Nadex broadcast yesterday, you know that I was talking about gold and silver both dropping lower if we didn't hear anything, and man, they both got hammered in one day. Yeah, didn't expect that move that fast. I mean, we were calling for it to go down, but yeah, just wow, right? So the dollar has literally just on a tear, right? Dollar's been just going crazy. So yeah, the birds just said morning. They are awake and they are ready. So yeah. Obviously, we had some early morning news, but unfortunately, it wasn't news enough to kind of derail where the dollar is going and the rallying in the dollar. And there's a number of different reasons why the dollar has continued. Again, when you're looking over on the side, there's some things down here, but a lot of not too much necessarily dollar based, minus that the dollar continues to rally. S&P, gold, they're all bearish. Everything is bearish. Like they're already starting to switch, right? And we've been talking about that for a little bit now, particularly with gold and as well as the Aussie. And S&P, yeah, all the things that will give dollar, all the positive things that we can see with the dollar are also all the things that will lead the market to continue to collapse lower. And also we mentioned that yesterday as well. So looking in the last 24 hours, what has happened in that time frame? And you can see euro is down a little bit, right? Euro dollar down just slightly, not too bad. It's no news is good news a lot of times for the euro. The pound, even though there was good news, right? Good for their currency. The pound dollar got hammered, 111 to the downside. Now, this is more or less just a dollar play. There's a little bit involved with other things as well, but you can see, the pound yen is only 8 in 24 hours. So, obviously this is the big outlier for the day. Dollar yen, look at this, 96. That's actually a very big move in 24 hours for the dollar yen. And again, it's kind of one of those things that the ATR on this one, I think, is 60 or 70. That's big movement. That's pretty big movement. And again, it'll be interesting to see how this yen play, because it moves so fast, how that factors into the 8:30 CPI release this morning. Okay. And again, I haven't checked it yet. I was going to check it in a little bit here to see how much premium was actually baked into the CPI release, because I think this is going to be again, gold is where they're getting hammered because they're expecting this to not be great. But at the same time, it also leads us into an interesting trade setup. Now, dollar Swiss down a bit, up about 23. It's all right. It's not really like the biggest of moves. Again, it's kind of streamlined out. And again, looking in the news over here, you don't really see too much on the geopolitical spectrum, right? You really don't see too much. We don't, yesterday there was talk about China and things like that. We don't really hear much. China securitization performance watch, that's about the only thing. But again, that's not a direct kind of barb or jab at the U.S. So, you're starting to see this one kind of come back. You're seeing the Swiss start to lose its strength. And again, the dollar story. Dollar CAD 10 in 24 hours is really nothing. It's basically flat. I do expect to see some movement in that today with oil. But again, that one's just kind of been like on standby. Like last week, it was, we're going to do dollar for dollar tariffs and da-da-da. Haven't seen as much, right? So dollar CAD is kind of flattening out on us. Now, Aussie dollar down 53. It actually is interesting. Yesterday at ChartSchool, I mentioned that we still had that area of interest, that kind of yellow level, and we were getting some kind of nice pushes back into it again. And I said that I would probably leave it if we came for, I probably wouldn't go long on that area again, but the short triggered and the short went all the way down past where, we were looking to have, profit if you were getting short in it. So that was a nice mover. And then euro pound up 60. So again, this goes back into that kind of pound weakness. Right, we're seeing pound weakness, even though the GDP numbers were good. And again, this is one of those situations where, like, well, wait a second, why is it? It was great data, right? But they're talking about the quarter over quarter as being, minus 20%. So, was it a green number? Yeah, it missed it by 0.1. But at the same time, your GDP number was down 20% in that quarter. That's a big number. It's definitely a big number. Now, GDP responding back is obviously good month over month, getting 8%, but 20% is a hard number to kind of stomach. And it's like, oof, what if any problems happen again, you know? So again, I think that's really what's leading into this one. And again, pound yen, you're seeing that the yen is getting destroyed, right, with the U.S. economy, with the overall indices, as well. Again, it's kind of like a double week, right? Week cancels out week, and that's why we're seeing, the pound yen really not doing much. 15 is nothing for that pair in 24 hours. And again, that's why it goes back over into the kind of perfect storm of the pound dollar. Okay. So today, as you guys know, we have the CPI number, and this was really going to change the narrative on gold today. This consumer price index, you guys will see it right here. And again, this is talking about, overall inflation. Okay. Why do people buy gold? As a hedge for inflation? Okay. That's kind of it, right? If we don't have inflation, what's that going to continue to do to gold? Probably get a bit interesting, right? Probably get a bit interesting. I don't know. I mean, if this number is even lower, like if this is a miss lower, showing that there's really nothing, man, I'm curious to see where gold could drop back to, and not even necessarily even gold, but silver, right? Because people were like, oh, silver, it's going to go high, all time high, silver, and everybody started mentioning silver, and if this fails, silver could be in trouble. So crude oil inventories as well are coming in at a negative number yet again. But again, this one hasn't been as much of a factor lately. You could say that the oil inventories are going down, but if the economy is also going to crap, does the oil inventory matter necessarily as much? And the answer is, not really, right? If demand goes down, I don't know if you guys saw yesterday, but the Big Ten and the Pac-12 both canceled their fall sports. And they are pushing them off, and they're hopefully going to do them in the spring, which I don't know, man. Spring's going to get interesting. We're going to have football seasons. We're going to have lacrosse seasons. We're going to have soccer seasons. We're going to have baseball seasons. We're going to have basketball seasons. There's going to be like a sporting event like 24/7. Like I feel like universities are going to have to hire a ton of people because they can't shift like the field crew from basketball, from football into basketball into lacrosse. I don't know. There's just so much stadium space. It's like, I don't know. I'm kind of looking forward to it. It's springtime now. If we have like Saturday football and lacrosse, you could tailgate like the entire day. Not that Maryland football is good, but obviously our lacrosse team is very good. But I just feel like there's so many, if you have a good lacrosse team and a football team and a basketball team, I feel like alcohol sales are going to be really, really high in the spring if every single college sport, like March Madness could literally be like a horse racing trifecta, right? Like, talk about the gambling that can happen in March next year if you have, again, football, basketball, lacrosse, baseball all at the same time. It's like, man, you could get some crazy gambling in there. Vegas is probably drooling, right? But so with everything and more stuff shutting down, I don't know if this oil number is going to make as much of an impact as it would under normal circumstances. And then tonight, employment chains for the Aussie. Very interested in this one. For a couple different reasons. But one, again, we're seeing the Aussie high on the curve for the most part, but we're seeing it starting to collapse more in the lower time frames, and it's supposed to tick up. So if this just happens to tick up even more than expected, again, this gives us some more power, some wind at our sails to drive this, this Aussie even lower. Particularly, again, not even comparing it versus the dollar, but particularly in the Aussie yen, which is quite high on the lower time frame curve as well. Aussie dollar is obviously on the lower end of the shorter time frames, but on the larger time frame charts, the Aussie yen is still quite high. And there's a trade that actually just triggered about an hour ago, hour ago at this point. It's already out though, but I'll show you guys that one. What I mean by why I'm kind of excited about that one, where it is placed on the curve. Alcohol, hot dogs, and brats. Yeah, I know, right? There'll be so much tailgating. So much tailgating. I feel like if you were like the college super fan, you could be like, I'm going to go from this tailgate to this tailgate and this tailgate and this tailgate. Yeah, it's going to be crazy. There will be people painted multiple colors all day long. COVID everywhere. So that's what we have. So again, I think the news today is great. I'm pretty excited about it. Like I said, this 8:30 and then the 10:30. I'm going to see where that one goes, and then the 9:30 tonight is really this 8:30 and the 9:30 are really my two favorite. As far as the most recent news in here, nothing really too crazy in here. Some minor things. Just again talking about the dollar, New Zealand election date in doubt. As COVID-19 returns, and again, everybody's going to run into this, right? When it returns, I'm just, my biggest fear at this point with, as far as, I have many fears, obviously everybody does, but as far as COVID goes right now, My biggest worry is that COVID won't be kind of like chicken pox, right? Where if we, just, oh, here's the vaccine for it. Okay, great. You'll never, like, I had chicken pox. My kids will never have chicken pox. They had the vaccine against it. So it's not something that they have to deal with, like shingles. They're never going to have to deal with that crap, right? I'm hoping that the vaccines for COVID are more like that versus the flu vaccine that we're going to have to get a bumper every single year. Obviously, the flu vaccines don't work that great because every year it's like, yup, didn't matter. It mutated before we were, by the time we produced it. Hopefully, we can get ahead of that. But I feel like this winter, if the second wave is not officially here, like everybody, it's just going to be all over again. It's going to be a mess. And yeah, there'll be many problems with it. So this COVID-19 returns is something that it'll be interesting to see how countries like New Zealand, some of the early people had it and what their response is. We obviously know a lot more to it about it now. And it'll kind of be interesting to see, how it really affects the elections. I mean, I don't know. I think there could be a great system put in, but unfortunately, it's not going to matter what system is in. It's going to be screwed up. Sending people postcards that they can check a box and send back in, I think, is a horrible idea. I think there is such an opportunity there for fraud. I think it should be like your taxes. And again, if they need to do a recount or 2 or 3 recounts, then great. That's what they need to do. But there should be something similar to your taxes where it goes back out again. Your Social Security number, it goes right to you. Send it in, and there can be no doubles, right? If somebody's already filed taxes on your behalf and you file them again, you get a letter back that says somebody already filed taxes. There's some fraud involved here, in which case they could do the same thing with the election that, hey, listen, if there's a second one put in, there is fraud there, And again, they need to be able to go through and filter all that kind of stuff out. And, if everybody has IRS put it this way, if everybody has an IRS login to be able to get money for stimulus checks, why couldn't we use kind of something similar with the same IRS logins to cast a vote? Right? But they're not going to do that. They're going to do something stupid where it's just, I'm going to mail a postcard. Check a box and mail it back to us. Postage paid, baby. Postage paid. And that's going to screw it all up. And there's going to be nothing about fraud, and we're going to hear it all over again. Also yesterday, one of the things too that may be helping the dollar is, again, Biden picked Kamala Harris. My response was, can she do it without Biden? I don't think she was necessarily a kind of, I don't know. The people that I talk to, and again, remember, we're not really big into politics here. But my kind of response is, I'm not the biggest Joe fan personally. I just don't think he has the wherewithal. He says one thing and then somebody, I feel like he's just not dementia. I'm not going down that route, but I just felt like even as a vice president, when they were campaigning, he would say something that would contradict everything that Obama would say. It's like, Joe, stop talking. And I just feel like, it's kind of, he hasn't gotten better. He's just gotten older. So, I don't know. I just don't understand. Now, Democrats are like, yes, we got her in because we're going to win the next 6 elections. So she's being lined up to be the president. It's like, well, if she's being lined up to be the president, just put her in now. And they're like, well, people wouldn't vote for her. It's like, well, I don't understand. How is she good enough to be vice president, but you can put in, a guy that doesn't have his wherewithal as president? Like, it doesn't make any sense. Like, you can't play both sides of the equation, right? If you guys are so excited to put her forward, then put her forward, right? The fact that Joe made this promise that he had to pick somebody and that all the news releases out there were like, okay, well, he has to pick a female and she will have to be black for him to win the election. It's like, man, why we got to bring, we're bringing all kinds of stuff. Like, the woman has the background. I think she's definitely qualified. Probably more than Joe, but just that stability, now that there is kind of knowing what the card looks like, is also bringing some strength back into the dollar because, again, it removes one piece of uncertainty, and uncertainty is what causes weakness in the market. So just that certainty there, whether she is the best candidate or not the best candidate, I think she's highly qualified. Like her, dislike her. She's got the background for it. She has more of a background and qualifications than Obama did, for his, first campaign. It is what it is. But that level of certainty, I think, is something that is good for the markets. Okay, now, with that being said, again, having a candidate that's on that side of the aisle, now that ticket is formed, that is also going to hurt the overall stock market in general as well. Okay, because Democrats are not pro Wall Street. Where we're at with COVID and everything else, we are already in a kind of a strange situation. Now that that side is done, and we know, and it's not some absolutely just off the wall crazy pick that's like, what, you're not going to win with that group. The stock market, again, in talking to people that analyze markets, okay, everybody is predicting a huge crash, an absolutely just huge crash. Okay, there are some people that saying it could be as big as the 29 crash, right? This one will probably be a big one. We've been in this market for so long; it's been rallied. We propped it up as much as we can. COVID comes back. We need to shut things down again. It is going to collapse. So, preparing for that will be interesting, as well as there will be a lot of money, guys. A lot of money to be made out there. So, I'm not necessarily worried about the crash. I know lots of people are out there, but I'm like, fine. That's just what we roll with, right, guys? When the market goes down, what do? We hit the sell button, and we make money on the downside. All right? So let's dive over into charts. Actually, scanner-wise, real quick, let me just cover this. So scanner-wise, this is, again, I have it set for the intraday levels right now in 4 hours. The one thing that I am noticing in here right now is you're seeing a strength start to come back into the euro in a minor way, right? In a minor way. I mean, we see the dollar strength over here in the majors, like the two first dollar pairs, both blue. Everything else, more or less, besides the dollar CAD is down, and the dollar CAD is just flat, so it's not even really necessarily negative. But we're starting to see some strength creep back into the euro. You're seeing, besides New Zealand, which again we know why COVID is reemerging again. We're seeing pound weakness across the board. Okay, the Aussie is currently split, but I feel like the Aussie is kind of more. I feel like the Aussie is in that rotation phase right now. I feel like it's starting to kind of push back to the downside. And then again, CAD basket. CAD, I just don't feel like has a lot of strength at anything. I mean, CAD yen is the only thing showing up. Again, that is positive for the CAD. You are seeing that the dollar CAD, euro CAD, those are down, showing again CAD strength, but then CAD Swiss jumps in there and kind of messes it all up. So for the most part, there is a minor, like on a 1 to 5 scale, I'd say there's like a 1.5 kind of strength build in the CAD. And again, that could be because of oil news today. But again, CAD has no news releases this week, so not too much really is going to be driving that one. Canadian government has been quite quiet over there. Last thing we heard again was that we're going to match you dollar for tariffs. It's like, well, great. Our economy is 8 million times larger, so we can go dollar for dollar if you'd like. Again, that's just lip service for the most part. Okay, so again, scanner wise, right now, there's been a couple trades already this morning, but I'm it's interesting to see the pound collapsing, the CAD getting a little strength, the euro getting a little strength, and then seeing the dollar strength. Again, probably due for somewhat of a reversal at this point. All right, so let's go over into charts. Let's see. What was that earlier in the year about LA County's voter rolls being 120%? Yeah, I know, right? Yeah. And that's the thing, like election-wise, they're like, oh, well, Russia helped. It's like, you know what? Russia's probably helped the election the last 5 times in a row. China, you ever think China's interfered with our election? And how many times has the United States interfered with other countries' elections? So, like, people getting their panties all in a bunch. It's like, ooh. Like, everybody does it. Like, it's so ignorant to think that we've never interfered in an election of a foreign country. Like, really? Like, how many coups have we assisted? Like, how many times have we, intervened? Everybody does it. If they beat us, great. Then we need to figure out a way for them not to. But like, to cause all this drama about it is ridiculous. I'm sure that they have tried to interfere in many. And again, how did they do it? Go back to how they were able to do it. What is the mechanism that is destroying basically all society right now? Facebook, right? Mark Zuckerberg can sell all of our data to other countries. He can sell it to political parties. He can sell it to, and again, we don't have to point fingers, but he can sell it to specific political parties, send it to foreign countries and everything else. And yet, what do? Nothing. But people are pissed at Russia, right? Yeah. It's just, like whatever. I love when they go on the Hill and people are like, man, he got slammed today. It's like, but they're not going to do anything about it because they hold Facebook stock. I mean, they're not dumb. Yeah, you're a very bad man, but keep going. I have your stock. So here's where we were yesterday. Where's my cursor? All right, so here's where we were sitting yesterday, right around that time. And I mentioned, listen, we've pulled down. We've gotten kind of an entry again, right? This 12:30 time frame. And again, is it worth a short? Probably. Again, we got to start being cautious. But it gave us the nice bounce and the retest, right? So it gave us both pieces that we were looking for. And I mentioned, again, would I take it on one hit and drop? No, but the retest gave it to us. It went all the way down and ended up hitting that 71.18 target that we were looking for. At this point, again, going to a higher time frame, you can see we're starting to get lower on the curve down here. So again, profit target was hit, but as far as a true entry from there, I mean, this is a very large zone, particularly on the hourly. I don't really necessarily like the formation. As far as a long, I was okay with 71.04. I feel like that was kind of a tested level. But again, this right here, this is always hard, right? It's very, very deep, right? It's been touched. And again, coming across, I'll drag it across from the bottom so you guys can see where the top of that line is. You can see that that's where it came in at. So is it a valid area? And again, that's what this came in right here at. Right, that's where that zone came from. Is it a valid area for your long? Sure. Is it in the lower part of the curve? Yeah. Could you have taken a bounce off of it? Sure. Would you have been profitable right now? Yes. But it's one of those things. It's kind of like the way that this hit and again bounced again and then retested again and came lower. It's kind of one of those things. It's like you got to really kind of wonder. The risk on it is only 10, so it was rather small. At its peak, it only went up to 25, so you're 2.5 to 1. If you were long off that area, again, you would definitely have this thing. At least kind of banking a few pips on this one. You definitely wouldn't be taking a loss on there. Okay. It is counter trend. It is on a lower time frame. Was a tested level. So, I mean, all these things are in our favor, but, at the end of the day, it's kind of like, the way that this is pushing down, with all the grain and everything that we're seeing, really until that, unemployment number, we don't have a lot in there, right, to kind of, fuel this one, right? Because we don't have Aussie news and, this is not one that I took. It was a little bit too early in the morning. I mean, you're talking about, let's see, this was originally hitting at like midnight, 1 o'clock my time is where the entry was. So if you were awake, it's something you guys could have got long in and then, rode it for a bit. But again, you had to been very, very good with kind of moving your stop loss. For today right now, again, I'm kind of looking, larger time frames. This is a big zone that we're kind of messing with. And I mentioned it before. I've mentioned it before. It's a larger zone. And here, I'll do the overlay so you guys can see it real quick. We're kind of really from, and again, if you guys can't see the dotted line in here, it's from here to here. That's where the actual zone is right now. Let me change this to white. So this is my concern with this level. This is the actual zone right now. It's a 4-hour zone. There's a lot of areas in there where it can turn around. Again, there's these small little ones. There's the one that we just kind of kick through right now. But the question is, where's the true, kind of buyers coming in on this one? I think that it's harder. I think the 70.84 is probably, and again, that's the lower end of this zone. We've kind of see, movement back here. And again, when we drew that one, that is kind of coming off these tests right here, right? Test, and kind of the lower side of it. So I think that's ideally where I'd be looking for a long. Again, CPI in 5 minutes could definitely affect gold pricing and move this one around a bit, but for the most part, any type of confirmation in here, or, again, if CPI is a non-factor and we push down, there probably is one more bounce in here left at like a 10 o'clock, right? Something for like a 10 o'clock reversal, something on one of these smaller time frames. And again, it could be this 70.84. There's a zone that the indicator painted here. I'll move this out to the side. If we can continue to push down, again, little zone here on the hourly, little zone here on the hourly. This one here coincides with the top. It's very small risk. It's only about 9 pips. That's probably what I'm going to look for. I don't know. 10.30 probably, but I think that's the next place that I'd be willing to take, some type of a bounce off of it. I don't know. Like I said, it's not a pure Aussie play at this point. It's more of a dollar play, and again, the inflation number has the ability to affect that. The overall market today, again, if we want to take a swing early morning today, that will also affect this one. So this one has a lot of different factors. Now tonight, again, I want to see, again, going down my 30-minute hourly time frame, the unemployment change number can definitely move this one, and the dollar will be kind of removed for the most part tonight at 9:30. That will give us better opportunity. What I kind of like to see is I kind of like to see this thing kind of just push down and break through these levels, and then again be in the 70.84 tonight for 9:30 unemployment. And then if unemployment rate is not as bad, that will give us some Aussie strength and give us a nice little bounce off of there. Again, the premium will be much less than it is right now. for Nadex. And again, there'll be some smaller time frame things that we can play with the Aussie on that one. So I think that's probably the way that I'll look at this one. Now, Aussie yen has already given us a trade this morning. You can see that it's already hit 1 to 5 profit target on this one. So I have this drawn up here not for, not to be patriotic for any country, but as I mentioned before about the Aussie, of where it's located on the curve, this is a 30-minute chart, and you can see the Aussie dollar, the Aussie dollar is low in the curve, but the Aussie yen is high in the curve. All right. Reason why I drew this one up, again, this was a trade that, was taken a couple hours ago, about an hour and a half ago, 7:30-ish. We had a nice push off of this, right? So whenever you see large pushes, like very strong pushes like this, you have to assume that there are still buyers there, right? Big candles means big money, right? As this rallied all the way back up again, you can say, and again, I drew these boxes. These boxes are showing me where we are on the curve, right? So what is it showing me? Well, it's showing me that we're in the upper 33% of this area. We should be looking for shorts. We have a nice level of popping, basing, and collapsing, dropping off. And that's exactly what set this trade up, right? It was small. We're not talking about, enormous trades. It's very, very tiny, right? But again, it's for the education aspect of it, right? The 1 to 5 target on this one was only about 12. So again, not huge movement, but I'm trying to show you guys, again, this is what we're looking for. Now, it just shows you how compressed this is. This chart is really like this. But what I'm saying is on the 30-minute, we're sitting much, much higher on the curve. Okay, we're sitting much, much higher on the curve. On the 4-hour as well, you can see that, again, 4-hour wise, we are still high on the curve. We are not at the peak, but again, we're getting in this situation here where we have kind of the lows coming in, right? We're seeing the sideways movement, the consolidation coming in. But something like the unemployment rate, as powerful it is, could definitely give us that movement of what we're looking for. And again, just an example, right? Now, if we can grind up again a little bit of dollar weakness or a little bit of retracement in the yen today, if we can push up, the same kind of criteria matters, okay? Now, let me remove this. Let me remove, again, the curve so we can see a little bit better. Now, we can drop back down here. It's fine. We still have this area up top that we're looking for. And yesterday we talked about if we can get up to 76.37, we're looking for shorts. If we can get down to the 75.69, we can also go in for longs. Now, you can see there overlay-wise, there's a couple hourly zones in here. This hourly zone actually starts here. There's one that starts down here. So what I'd like to see is if we can get a push higher, and again, this shouldn't be that hard of a level to break through. It's very tiny. Like I said, it's small, right? If we can push higher, that actually gives us the ability to take this one thing short tonight. Now, it has... it's only about 16, but it's got to break through a level. So this is going to be one of those things that we're going to see how high it can actually push today. The worst thing that could happen is this to have continued weakness all day long and kind of put us and leave us smack dead here in the middle, because that doesn't help us too much for the news release later. If it's able to kind of get weak and this thing wants to push all the way down, I would be okay with that. That actually matches better to what I'd like to see in the Aussie dollar than staying high, but I'm trying to stack on as many things as I possibly can. So for me right now on the Aussie yen, the 76.37, the 75.69, I think are the two areas we need to be focused on for tonight. Again, they may, they are pretty close. They may, be involved at some point. But I think either of those two are good levels. And again, there's a huge level up top here. That's a 4-hour level. That again, I don't know if we'll be able to get fully into that area. But right now you can see, this is bouncing off a 4-hour level to push down. So, couple different things involved in that one. All right. So both of these, again, are in play for tonight. Drop them down, look at the lower levels. Again, use your 4-hour to kind of get a curve idea, your hourly to probably refine these levels. And then something like this that is, only about 5-6 pips. Again, you can add a little bit of buffer to it if you need to. Okay. I think either of those two are good. Now, euro yen, as you can see, the euro yen is continuing to push. This is that yen. Again, we're seeing a little bit of yen strength. We're also seeing we're seeing euro strength and we're seeing yen weakness. So this one is continuing to push forward. You can see it came back and grabbed the 124.06, right? We talked about that yesterday. Here's your hourly chart. Now, your hourly chart is really not as impressive, right? Not as impressive. Here's that old zone again. We ended up coming through. Here, I'll continue it across right there. And we kind of went below, tested. Again, it formed a level. Came back up, tested, and launched. So still on this one, we are still waiting for the hit of this one right here. Oops. Oh, I can't see it on that one. Right there. So 126.44 is really where we're looking for this one to go. It's on its way. I think it has the potential to get there today. Again, seeing that euro strength and yen weakness, I'm ready for this one. 126.44 is, again, where I'm looking to get short. With no news, again, that has helped the euro stay out of the limelight, but I think it's coming. And on an hourly basis, you can see, bring it across, you can see it's sitting right above there. Is it that one? Yeah, that's that one. I was like, wait, where the heck is it? Come on, readjust. Boom. Right at there. So we're about 60 pips away, right? Now, the daily ATR on this one is 96, so we are absolutely within striking distance at this point. I mean, it's right there. It's right there. And then actually, let's see. This is on the daily, so if I drop back down to the 4 hour, yeah, you can see it there. Let's drop it back there. You can see the zone actually comes in. Remember, we have to move this one around a little bit. The zone is sitting right there. And it is 126.35. Okay? So again, pretty close. Daily level, okay, those are typically pretty good. And again, this has been nothing but, strength and then weakness. And again, more strength on the yen's part than anything else, but looking for that one to get in. Risk to reward wise, it's not horrible. Again, probably something along those lines. If we continue to push up and nothing but green, I love where that one is at. I think that's a good 1 to 3 risk to reward target. Good placement. All right. Now, pound yen. So pound yen, it is just grinding through a daily zone right now. I mean, literally, it's just bouncing back and forth. We've talked about this 138. I'll bring it up to a little higher time frame. This 138.81, again, we're seeing it bounce back and forth. There's a little bit left in that zone, but you guys can see that the problems that it is having, right? It hit it and dropped, hit it and dropped, hit it and pulled back, hit it and dropped again, hit it and kind of got pulled back in again, and it's now basing inside of that level. So this is a level that is going to break. Buyers are just kind of stepping in. And again, it's not so much pound strength, but this is like ultra yen weakness. Because again, we're seeing this in the Aussie yen, we're seeing in the euro yen. It's pushed up. It just hasn't been able to kind of get away from the zone. If anything on this one, I would have to say that I'm going to have to remain bullish on this one. I do think a lot of the weakness coming into the pound will be kind of taken out of the market pretty soon. So I do think it will continue to push higher. As far as an entry on it, though, I mean, that's a little bit harder to play because right now I wouldn't say that really any of these additional kind of buying zones are great. I think this is going to be more of kind of a breakout the top side, for lack of a better analysis here. And again, this is that candle that I don't like. Can I see the other one? Let me see. I don't know if I can see it on this one or not. Not really. It's kind of sitting in there. Yeah, unfortunately, this is one of those ones that it's going to be harder to get an entry on. And again, it may be, something like this, right? It may be a pop through that level and then a retrace. That, and again, I like that. I like how these wicks are going down, right? Here's one, then there's a lower one, then a lower one, and then finally the move down. So, that could be the zone break confirmation that we need to the top side. Unfortunately, right now, it's just so consolidated. It's moved 16 pips in 24 hours. You guys can see its daily ATR is basically flatlined again. And actually being here, it is lower than what its average has been since August of 2019, right? We're down to 109 pips. 107, I guess, is where we are right now. 109, and you could say that the average is probably up here around the 140, 150. So it's definitely declining. It's definitely gotten all of its volatility sucked out. And again, the only thing that's keeping this average high, in fact, is this gigantic collapse here. But we're just not moving. We're just not moving in that pair. So, we'll see. I think the only thing we have later on today is, again, a pop through this level and continuation. It's probably the best looking thing that we have. All right. Looking at pound dollar. So pound dollar obviously is the mover. It's moved 96 pips to the downside since yesterday. It's really dropped back down. Here's kind of what we were looking at, right? So here's where we are right now. And yesterday we were sitting right in this area right here, this kind of pullback. We got a break, a little bit of a zone we mentioned right here. Actually, yeah, it would have been right. Yeah, right in here. So we were forming that level at 130.85. We never really got a pullback. It just continued to push lower, lower, lower. And you guys can see what it ran into here. It ran into an hourly zone, right? So this was a big hourly zone. We mentioned it before. Buyers had stepped in. We weren't looking to buys until 129.91. We didn't make it. It ended up literally just tagging, which would have been the profit target. Because again, we want to make sure we were out on the opposing zone. It was tested. We knew buyers were there, and the buyers stepped in. So in your short, if you were able to get short this position, you should have been out with your full profit target. Right now, really not much we can do with it. This zone, Yeah, it's marking it off. I don't like the way the candles formed on there. I'm not really a huge lover of that one. I think if anything, if you're looking to get into this one, there's a small kind of piece in here, a small piece up in there, approximately at this area, around 130.81. But again, middle of kind of this area. I prefer if it was this one, or even better, this one up top. So, I think if this is able to push down, I think long targets off 129.91, potentially 129.77. We got to see what time it hits these. Remember, the 129.77 is a larger time frame level. The 129.91 is based off of 30 minutes, so much smaller, much smaller. CPI data is out, so let's see what that one came in as. Okay, so that was actually a kind of more of a surprise. So let's see how the media spins this one. So this one came in as exactly what it was last time. The core CPI obviously increased up a little bit, so they're seeing a little bit of inflation on both sides. Well, not really on CPI, but it came in just as what it's consistent. It hasn't increased or decreased. Now, what the media is going to say, right? The media will say, "Oh my God, it was a higher than expected inflation," right? Because that's more inflammatory than saying, "Hey, listen, it came in as exactly what it was. It was unchanged from last time," right? Same growth. But they're going to spin this and saying, "Oh my God." Now, remember, if this was the other way around, right? If this was the unemployment number and it came in like this, they'd be like, "Oh my God, it's grossly under what it was before. We hired so many less people," right? It would be negative. Here, they're going to go the same way. Inflation, 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 right? They're going to talk about it. So this actually should help gold out a little bit, seeing that, the prices are going up a bit. And there could be a number of different reasons for that one. But, oh, look at this. Oh, this is going to mess with gold today. So I was going to say, this will definitely help gold today. But look at this thing. Came out 11 minutes ago. OPEC lowers global oil demand forecast by 390. And this is interesting because this just came out. That report that I am creating for the presentation on September 2nd, I talk about how basically looking at BP. BP puts a report out. I think it's once a year or twice a year, and they talked about how demand is too high, and they already had a lower forecast this year. And the comment is, this is pre-COVID, and OPEC comes out with one a little bit more frequently, and they said, "Oh, we already have a lowered forecast for it," because they were like, "Well, we." All right, looks like we're back. All right. This is why I have multiple monitors up. This is why they're multiple monitors. Yeah, it looks like we're good now. All right, I can see it again. I can see it moving on both mine, on YouTube and Twitch. All right, so Euro Pound. Obviously, Euro Pound is going crazy right now. It's not so much right now. I mean, again, it's been consistent all morning, and this has really been happening since the GDP numbers this morning, right? And again, we talked about this. Now, I expect there'll be some type of a retrace stepping in here rather soon. It could be in this area. Again, it's not at the kind of peak of the curve here. It's an area, but prices pushed this far deep into that area. So I expect there'll be a retrace. What I'm looking for here is kind of one of those theoretical hires being put in. I think there will be definitely some opportunity to kind of take this one back over. It's just whether or not we hit here or we hit a little bit higher. Now, the 4-hour zone goes from, let's see, it looks like it goes from here to here. So we're in a zone. We've punched into it. The question is, which one of these areas is going to turn? Is there a better one here? Let me see. I actually feel like maybe that one is better. It's interesting because, look, we have this big drop here, but this was a test of this level, which was a test of this level. So there's a couple different levels in here. So what I would do if you guys are going to be in front of your desk today, I would look, at least on the 30-minute, I would look for some type of a reversal confirmation in this Euro Pound. I do think this Euro Pound will turn and flip back down again. Like I said, the numbers were kind of expected. It's the reaction off of it. But again, I don't think that, it's not like the European Union is in any better of shape than the UK right now. So, it doesn't quite justify this much of a move off numbers that were more or less expected. Again, the GDP number was not bad. It went up actually more than what was expected. It's just the quarterly number is unfortunately weighing down on this one. So, I would be looking to get short the euro pound somewhere in here. It's obviously not set up yet, but we are getting rather close to getting that entry. And again, there's a couple different ways you can do this one. You can set alerts for a break below, a prior level in here. We could probably even do it on 15 and see if no, there's not really a good pullback on there. I mean, you could look for it. You can set an alert and look for a break of that level right there. And again, get some type of confirmation entry on it. Again, a red, green, red could do it for you. It's one of these levels in here is going to stick. It's just which one. And again, we're looking to overtake. Basically, you're looking to retake this area right here. Just oops, nope, cancel. Nope, cancel. This green, yellow. Yeah, it's fine. That's the area we're looking to overtake on this one. So I'd be looking for a push down on this one. Again, playing that retracement. One of these levels in here will hit. Again, with Nadex, you don't have to worry about this as much if you guys are looking to get short. Again, obviously expiration is going to matter on this one, but that's what we're looking to retake. Make sure you're out. Profit targets need to be before 89.99. Basically, 90 is where you'd want to, right there. So close. There we go. Perfect. Look at that. All zeros right across. Make sure you guys are out on any of your shorts before 90. All right. Now looking at the euro dollar. So euro dollar, we've had a couple different positions in here. So we are sitting right here right now. Yesterday we were sitting right in this area. Okay. We talked about this zone has been hit a few different times. Again, it had hit again. Here's where we were for yesterday. So we'd already seen this one. It had the continuation back to the downside. It hit both the targets. It came down and it grabbed some lower levels. And again, we really weren't looking to get long this one. What we're looking for more on this one was a breakout to the top side. Right? We're looking for price to break through this 117.98 range. And again, we have this prior level that has, provided a short here, a short here, a short here, a short here. We're kind of looking for a break. Remember, that kicks in right about 118 is the start of that level. So if it hits 118 and drops, great, we missed it. Oh well, no harm, no foul. What we were looking for is a break above 118.12 and then a pullback back into that level. Remember, Harry Potter to the top side, we're looking for white space. We want it to go through, pull back, and then launch itself forward. Make sure that you're out on your targets at least. Again, the 1 to 3 is okay. The 1 to 5 is not bad. 118.72 is more or less what we want to grab on the backside. Pull this overlay off. I don't need the overlay right now. Bam. All right. Trying to see what it hit to the downside. Yeah, it ran into that level. So it ended up hitting the target to the downside. So again, we're coming back up. Like I said, I'd be very cautious. This one is hit now. 1, 2, 3, 4. It's been hit 4 times now. This would be hit. I mean, technically, I guess 1, 2, 3. This would technically be number 4, number 5, depending if you're going to count the second touch in here. So very cautious about shorting it again. Like I said, if I miss it and it goes down, I didn't have a position on, so I'm not necessarily worried about it. I'm looking more for a pop to the top side. This zone, again, it is a little worrisome, but the candle formation is kind of strange. It didn't actually trigger until up here. The actual zone is here. Right, that's the actual trigger mark, which just coincides with the 1 to 3. So I'm okay with this to the top side pushing forward. But again, looking for European strength, and again, kind of a switch in the the dollar. And again, with inflation going, being higher than expected, that's something we're probably going to continue to see today. Okay, dollar CAD. So there's your movement. Again, it's coming down 132.56. Again, this is CPI that you're seeing. Obviously, it's going to be weak for the dollar, and it's going to give us that strength that we need. This is actually not a horrible level to take a bounce off of. Question is, again, retail traders are going to have to react to this one. So we got to really wait for about an hour and a half. I mean, really till 10 o'clock for them to really, truly have a chance to react to it. We are pretty close to that level right now. So it's like, we're kind of like right there. Do we take it long now? I mean, it's kind of like, it's so close, and it just missed it by a few pips. What I probably wait to see if this, this is initial pullback is just trying to get some more steam and use that level for a little bit more, right? And again, it's low on the curve. There's one level and then another level right below it, so it's not a bad level to be taking longs off of, which would make which kind of makes sense. oil figure could mess this one up a little bit, but not too much. I think we're probably pretty safe for some type of a long opportunity here later today. So, I mean, 132.56 with a confirmation bounce would be good to the top side. It'd be something along those lines, which is, it's not bad. I mean, this is a retest of that basing level. So your 1 to 3 isn't horrible there, and again, I like this if it hits, bounces, and then comes back up again. Gives us that kind of confirmation bounce. I think that would be probably the cleanest way to play it, because it might actually go down to this lower level as well and then bounce through that level. So, get a confirmation bounce off that one or this level right here. Right? Either of those two levels would work, right? Let's change this off that color. It's like lizard green. There you go. Either of those two levels work for dollar CAD. Now, dollar yen. Ooh, dollar yen's going to have an interesting day. So dollar yen has obviously been rallying back up again. Inflation is not necessarily great for the economy as well. I still think we need to have some patience in this one. I still think 107.17 is the area that we want to hold for. We mentioned yesterday we had a little bit of a base here, and you can see it hit that zone and pulled back again and kind of formed a base. Nice ascending wicks on this one. So it did what it was supposed to do, right? It responded totally fine. We're sitting right here yesterday. Yeah, still patience. 107.17. I think that target to the downside is good. A lot of stuff up, a lot of stuff going on in there, but I think this one looks something along those lines. Okay. And again, your 1 to 3 is in a fine place. You get a little bit of basing. Definitely an area you want to make sure that we are out before we get to it. Actually, it would go there probably. Yeah, right about there. All right. So 107.17 is still a short target. Again, 4-hour zone on the dollar yen. Dollar Swiss. Okay. Obviously, this is going to be affected right now by the CPI data. Let's move this over. This is where we are right now. Now, there is a shorter, a smaller time frame channel here. Let's see. This could be a little interesting of a setup right here. So, again, last time price was here, it did give us a nice little push. It would look something along, let's move this to the side. Look something along those lines. Not actually a horrible target, right? That comes in at 111.15. And again, this is obviously the initial reaction off of the CPI data hurting the US dollar. But once we absorb the kind of initial shock of that one, this may give us a nice little bounce off this dollar Swiss. And again, is it earth shattering? No. I mean, the inflation was at a consistent rate month over month, what it was last month. And again, remember, they do have a mandate to have, a consistent level of inflation. So, is it necessarily bad that it was 0.6? No. I mean, they're supposed to have a specific level of inflation that they target every single year for healthy growth. So that's not bad. Yeah, not a bad target there. Let's do it again right there. Okay, so 111.15 I think could be an interesting bounce. Below that, there's a couple junky levels in here. Again, if it breaks through here, I wouldn't be taking this one short either. There's a piece here, a little bit in here as well, and then obviously this piece down here. So would not be a short target for me. Again, if you can get a bounce off of this one, I'd love it if we kind of based and went and dropped in here once the market opened and then took the pop. I think is good, but we'll see if this is going to end up reversing on us too early. Now NQ. So NQ. Let's see where we're at right now. Obviously, with inflation up, prices are more expensive. Let's see. So we were sitting here yesterday, right in this level. This is another example of that kind of bounced in, grabbed it, and continued to push lower. I would have to say I'm probably negative this position today. I do think that this one will continue to fall. It will run into some buyers stepping in right here, just by the way those candles are formed. Let's see on the 30-minute. What do we got here? Yeah, about that level. Like I said, we based down, it gapped off of it, and right probably about there. I think we probably will have some buyers coming in at 874. Where are these zones? Let's see. Let's put this there. Looks like our next hiccup is starting down here at 107.26. So, yeah, I would have to say that I'm probably bearish NQ today, with no news outstanding. Again, now that we know who the running mate is, I think that will provide additional negativity as more things come out today. inflation obviously going up is not necessarily the best for the economy. We're not at a stage in the economy where, I mean, typically when inflation goes up, the first thing that everybody does is they look to the Fed and be like, "Huh, is anybody from the Fed going to talk about raising interest rates?" We are definitely not in a raising interest rates type environment, so I don't think the concern there is going to be as much. But again, if things are starting to get more expensive and people are concerned, I would say negative today. I don't necessarily have a great setup on this one. I don't know that I would take that level again. It's been a great level, and again, we talked about how it was, back here it was a top, and then it became bottom, bottom. Here it kind of drove through and became a top again, drove through, punched in, and became a top again. So maybe, I mean, I don't know. I could be talked into using it again for one more short by the way it reacted through here. But again, as you guys can see, punch through, came up, went high. Punch through, went down. So again, a punch up could also be a springboard, but I don't really see too much necessarily positive right now for this one. Going to the S&P. So the S&P has rallied back a bit. Kind of the same thing, looking like the same chart. Big drop down. Kind of the same. Let's see, and this, I'm already on a 30-minute too on this one. Obviously there's a zone in here. You guys can see it. Ascending wicks, bounce, and up. Would I take this one short right now? That's kind of a hard one. I will say this is a lot of movement, right? Let's see. Pop my timer. So this movement started at 1 o'clock in the morning. This is a lot of off-hour movement for this pair, or for the S&P. All right, there's a lot of movement, a lot of basing. Is this forming a top now with negative news? Could this be the short of the morning? Is kind of what I'm grappling with right here. Oops, not there. Right in that way. Okay. Again, parabolic retracement entry. It rallied back from the original parabolic retracement, has leveled off, has pushed down, and then has failed to go back into this area again. And again, it dropped and pushed back up again. But is that the kind of the hiccup to just, is that all the buyers that were able to kind of punch through? It went this far. Is it going to go this much farther down? Is the big question. So could that be the short of the morning? Could we be seeing 33.40 on the radar today for the S&P? In fact, could we be hitting the 33.30 area? I guess is even a bigger question at this point to the downside. It's not the ideal situation. We'd love to see kind of a hiccup over here on the left, but we're already in a 30-minute chart. But that failure to push higher, that kind of base down here, and the fact that it pushed through the wick over wick lower, again, there's a little bit of a hiccup here, leads me to believe that, man, if we get some negative sentiment, or the media spins this in a negative tone this morning, that retail traders may start the day off with kind of just, boom, shorting this down. OPEC also talking about lower demand is also not going to necessarily help, because again, they're admitting that the markets are weak. So this could be an interesting short going into this morning. The Dow. Dow looks very similar, but again, not in the ideal situation. Did not have a failure to go higher. If anything, I would say, again, we've had levels kind of sitting here up top. I think, either of these two are basically drawn the same exact way. I think, going in something along those lines is probably not horrible. It looks like this one needs a bit more. And again, inflation, I mean, they're raising prices on people, which is not necessarily the best thing, the most positive, but it's not giving us the same type of fare to go higher. So again, any type of a push up again, I think gives us the entry for the day. Now, this one is also setting up, we have an hour and a half before that reversal time. If this rallies back up into that 28.074 at 10:30, that could be our reversal point for, movement today. All right, and same thing. This one still has the same kind of that shadow at the bottom. If you are going to take shorts, again, it's probably going to have issues in that area. You can see it's been, it gapped from that area, it touched it, and then kind of bounced off of it. So it's definitely an area that you need to respect to the downside. Again, just watch it down here at 27,683. All right, now gold. Let's see. So gold actually doesn't have as much of a move as possible. Now, I mentioned it yesterday. Could we see gold? I said, could we see gold at 1862? And look at that. Gold came down to 1862, and it actually bounced off that 4-hour level. So it was a tested level. It did come down, it did hit it, and it did bounce off of it. So, pretty interesting that we had that type of level of collapse and then a turnaround. So where we are now, I'm going to take this one off because I said this was a trash area. I didn't really necessarily see that holding. Look at this right now. This is interesting on the hourly for gold. So this one, absolutely, without a doubt, should have had more movement based off that CPI number, and it didn't. Okay, this should have had much bigger of a pop. Okay, the fact that it didn't, the fact that it is hitting this level of basing right here, leads me to believe that this one actually, again, if we cannot get a whole lot of at the open, if we don't have a whole lot of gold buyers coming in, I mean, if they're not like hammering down GLD, showing more demand in getting gold products, I feel like this one is set up for a reversal. Typically, I wouldn't mess with this one right now. Again, it's already hit it once and twice, and this is kind of technically 3. So our chances are, we're lowering the odds on ourselves, but it's a decent level, and this should have had this level of a spike in there. Okay, this level coming in, let's see. This data coming in here at 2 o'clock leads me to believe that someone had this information early and tried to take advantage of this one in the middle of the night. Big question is how much are gold traders going to buy into this one? Like I said, gold market's open. We're good. This is there's legit people buying this one. But the question is, what does that retail trader do at 9:30 when they believe the markets are just opening? That's kind of an interesting. And again, this could be a short for today. Man, that CPI number, I wish it was just a little bit. If that core was just a little bit lower, I'd be into this trade. But yeah, so what I would do is I'd look for a bounce either way. Look to see if we can get a push down, a bounce back up, showing that it can't punch through again. And we've kind of already had it. But see if we